Hello traders out there in Traderland. The market's in the week bullish. Look at this, everybody in bullish territory. The thing that grabs my attention here is the NASDAQ is only up 1% when everybody else is up nearly 3%, but we got the Russell's up 4.4%. We got the financials up 5.3%. It's a huge rally there. The US dollar down, crude oil down 3.7%. Guys, that crude oil is down. We're down to 2002 levels. This is a huge drop in crude oil. Silver off by 2.5%. Gold off by almost 2%. VIX dropping. We're at 38. We're down below 40 now. So the VIX is still high, but dropping down. And look at this. Big fat, gnarly bear flag on the S&P 500. This is the spider, the ETF. You have this big drop. This is the coronavirus drop right here. Coronavirus drop, and big, nasty drop. It was the biggest drop we have seen since the Great Depression. For us to drop and go into a bear market, this happened in 19 days down, when the depression only took 15 days. So this has been a significant drop in the markets. Here is our bounce. There's the bounce. This is a bear flag, guys. If you don't know what a bear flag is, go to freeonlinetradingeducation.com. Again, freeonlinetradingeducation.com. That and type in bear flag, or just Google bear flag, and freeonlinetradingeducation.com will come up number one for bear flags. But look at the bear flag, look at those examples, read about the bear flag, and tell me what you see here. That's what it is, a bear flag. If you go here to the diamonds, that is a bear flag. This is a bear flag without the lines drawn on them. Let me get the lines drawn on it so you can do this. I'm using TradingView. If you go here, you can clone. I'm going to clone one and do this. TradingView. There's a link. It's an affiliate link that's down in the description. Go to that link and you can get a free account. Why not having a free account? Just go there and get a free account. That there, super cool. But look at this. Not only is it a bear flag on the diamonds, it's also a rising wedge. Same thing with the spiders. Go there, see how it's pinching at the top. That's a rising wedge. Diamonds, rising wedge. But it's in a flag pattern. So you got a bear flag and it's pinching. What's interesting here on the diamonds, even though we're only up 0.9%, it has crossed through some big time areas of resistance. Guys, because of this, I'm going to look at something. I'm going to go here. I'm going to pull a fib. Take a look at this fib. I can tell you this. We're going into consolidation now on the NASDAQ. Consolidation on the NASDAQ. If you go here to the Russell's 2000, that is a beautiful bear flag. Look at this. There. I'm going to right click. Right click, go to clone. Put one here, drop it. It's a tasty looking bear flag, and pinching too. See that? And pinching. If you go to the financials, same thing here, gang. Look at this. Go here. I can clone it. I'll clone it. Bring it there. This is a traditional bear flag. Traditional without the pinching part. But that is a bear flag across the board. On the S&P diamonds, the NASDAQ, the Russell's 2000, the financials, all bear flags on the daily charts. If you look here at the US dollar, we're down. It's a big bull flag. Big bull flag on the, and it's a, check this out. If I get a couple lines drawn here, we broke out of this falling wedge. Do you see this? You will after I draw the trend lines. This is the US dollar that broke out on Thursday. Friday, we pulled back a little bit, but look for the US dollar to go higher. This is, again, the daily chart. Crude oil, look at this. We're down, but I think we're at some lows here, guys. I'm looking for buying opportunities. Buying opportunities, I think, are setting up nicely here on crude oil. This would be interesting to see how the next week plays out. Silver has been up. This is interesting. Silver, wow, I'll pull a fib on this one too to see what's up. Yeah, this is a big bear flag, guys, on silver. Big bear flag. If I can show this to you here. It's a bear flag. I could go down to this. This is a bear flag. It's already starting to drop, guys. Silver's in a lot of trouble. Gold broke down. See, I'm going to get rid of this line. It's a junk line. This one still matters. But we dropped on big volume. Guys, gold is a sell. VIX is down. But it looks like it's ready to bounce. It looks like it's ready to head northbound. 38.2. The thing that I would like to look at here, though, guys, is down here at the bottom, you clicked on this little square. Oh, you don't see it because it's right off the camera. But this is going to the weekly charts, okay? The weekly charts, I want to take a look at the weekly. This is the weekly chart. Every bar is 1 week on the S&P 500. The spider, we drop. We pull back. This is a traditional bear pullback, a pullback sell. Go to freeonlinetradingeducation.com, look for pullback sell or bear pullback. That's what we have here with a reward to a really, really decent reward to risk ratio. The diamonds, this is the Dow 30, same thing, guys. We drop, bear pullback, a lot of reward to risk ratio. This is looking to drop. NASDAQ is very interesting. This is the NASDAQ. Every bar is a week. We hit resistance. We came down. We broke support. We go up trying to get back above that support. We it wasn't going to happen. We drop, bounce off of a trend line that goes way back. We bounce up. We hit this trend line again. We stop right at it, right at that trend line. So we're in trouble. We're at resistance. People will sell into that. If you look here at the MACD, down here, centered line coming across, we're still below the zero line, guys, on the MACD. This, again, the weekly chart that we're looking at. The Russell's 2000 weekly chart, up, tweezer top. We have a tweezer top and a hanging man. Look for that to drop. We are in this market is dangerously close from falling over the edge and heading southbound, guys. That's what we're looking at right now. Look at this. The financial, same thing. Up. And now we're ready to head down. This is a bear pullback. That's all it is. A really healthy bear pullback. US dollar down. Came down, tested this support level. We bought into that, heading back up. Look for the US dollar to rally. Crude oil is just, we had a chance a couple of weeks ago. This pop that should have been a rally, it did not. We're dropping again, but there's an area here. It seems to be nice support. Silver up, shooting star. Look for that to drop on the weekly. Gold, big shooting star. Look for that to drop. You do not want to get rid of gold and silver at this moment. Take your profits on gold and silver. The VIX weekly is down. Look for that to start heading higher. The other thing I'd like to look at here is the monthly, but the problem with the monthly is it's still moving. We're only halfway through the month right now. Because of that, we can't pay too much of attention to this candlestick. This monthly candlestick right now, the April one, this looks really bullish. And I would say this piercing pattern is ready to rock and roll. That's a bullish thing. I can't say that until we get into May. Right now, this could be looking great and fizzle away to nothing, which I think is going to happen. So what we're seeing here is a false thing. Look at this white candlestick here. What should happen is to rally up after a candlestick like that. We got the same candlestick here, okay? We should rally up. But the problem is this candlestick hasn't come to completion. In other words, it's still a dynamic candlestick. It's still moving. It's not yet static, okay? So that's problematic. The diamond, same way. The Dow is at a major support level. It stopped. It opened below it, but we're rallied above. The question is, for the next, until the rest of the month is up, will we stay above this trend line or will we be below it? If we're below it, sell city. NASDAQ is looking bullish to me. We drop down, we come up, but if we sell off and we break this support line, we are toast. Here's the Russell's 2000. Russell's 2000 has a higher low for the month, but a much lower high. It's just floundering down here at the low. Financials, we had major support this last month. We came back and closed above it with the red candlestick. This month we opened lower, but we're above it at this moment, but we're dropping. Look at the upper shadow. If this continues to drop throughout April here, close below it, this market is toast for many years to come. Remember this video and say, man, I remember D7 saying this on the video on April 17th when he cut the video, but it's good to April 19th because it's going through the weekend. Just remember this discussion this time. And look here at the US dollar. We're over a resistance area. Let's see if we can continue higher. Crude oil is just down, down, down for the month. Very interesting. Man, it's just, we're at lows that we just haven't seen for decades, guys. The craziness. Silver is trying to hold in. This is the monthly, okay, on silver. If it closes down below this, silver is in dire trouble. If silver comes down here and closes below here, we're in dire trouble. Gold looking so much better than silver, but let's see what it does. And then quickly, VIX is that you know what, VIX for the month is starting to drop a little bit here. Something I do want to look at. Let's take a quick look at Grok tech stocks and take a quick look at the monthly. If you look at the monthly chart on Apple, down, the monthly looks pretty solid. If you go here and look at the weekly on Apple, down, 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 that's a bear pullback. It bounced off of support, but that's a bear pullback. So it's ready to set up to drop here. If you go to the if you go here to the daily, we're up, busted through a big area of resistance, and we're trying to stay. This is bullish because we're building a high base here. Bullish, bullish. And Guild, by the way, had a big rally northbound. It was up nearly 10% for the day. That big news on these guys, as everyone's talking about now. Let's see here, a couple big movers. Catfish, Cognizant was up 4.5%. See this double bottom, down, up, down, double bottom, W for wonderful, W for wow. It's just, W is a good thing, goes up. There's the bull pullback, there's the pop. That is really bullish. That's a bullish setup there. Look at GoPro up 9%. Go GoPro. This is a bear flag though, guys. Even though it's got a nice pop here, I would be really careful with buying into a bear flag. That could bite you. Netflix down 3%. There was the sell. Had a really good week, and now it's finally pulling back. Wait for a nice pullback before you look to go long on that if the markets stay there. PayPal is up over 3%, busting all sorts of resistance area. Kind of having inverted head and shoulders, rallied higher, looking so strong. But look at Shopify. Go Shopify. Shopify's up 12%, had an amazing week right at major resistance. Smacked his head right at it on big volume, guys. So this is sell time for Shopify. And anything else that grabs my attention? Nothing else grabs my attention. So here we are at monologue time. A couple things. You notice my hair. Guys, I've been in quarantine. Who has gotten a haircut, and how did you get your haircut? Because I'm just becoming a shaggy beast here, as you can see. I mean, this is just insane. But shaggy beast it is. But I don't care. I just like to sit here and be in the trading world. It's what I want to do. Interestingly enough, does anybody else drink these soda waters? My wife's next to me laughing at me right now. She's usually not in here when I do my videos. Say hi to everybody. Yell it out.
Hi.
So she's been helping me onboard a lot of the students. Our classes have been insane. Guys, everybody is wanting to learn to trade professionally now. Since this market correction, when the market tanked, everybody wants to learn. It's interesting. We had, I just got off the phone with a student. I said, how long have you been following us? Because I always onboard. You and I will talk if you sign up for our mentorship. I call you. And just to do a welcome call. But if you do that and sign up, I always asked, how long have you been watching? And it's funny, this guy today, I'll give just the first name, name's Kevin, said, I've only been watching a month. The reason it's fresh on my mind, I just hung up with you, Kevin. That's why I'm saying this. But he only been watching a month. Went and watched the reviews and all, and decided on us. He was looking at some different. So thank you for your business. But it's funny because another student of ours Phil, I'm calling out your name here too. You'll be on the mentorship this weekend. Phil, he's a personal friend of mine, and we go to church together, and he wanted to get into trading. So he owns a roofing business, and he came over to look at it. I had a big storm the other night and some shingles came off. He came and looked at it for me. And one of the questions he asked me was this. He goes, Des, why do you guys even take the time to teach when you're a trader? Great question. Here's the answer. It's multifaceted. We only cut out 3 days out of the month to take time out of what we're doing as traders to teach you guys. That's it. Only 3 days a month is all we do. So out of 30 days, we allot 10% of it to teach. That's all we do. And Mark, the Meerkat, he has a trading thing, so he puts in more time. He puts in over 3 hours per day, but it's not teaching. It's 3 hours where he's trading, and you guys in the chat room just get the benefit from that. So I hope that puts it into perspective for you. But on a more personal level, this is why we even do the courses and why you hear about it. It's simply because that's what did it for me. That's all. I blew through my first 2 accounts. I knew I needed to get formalized trading education or quit this very expensive hobby. That's what I came to that realization. Ended up going with a group called Teach Me a Trade. They're not around anymore. Teach Me a Trade. I dropped $21,000 with them. All of our competitors now, they're right around $25,000 on average for trading education. So it's like going to college for a year. That's what it's like. That's how you have to look at it. But we keep our tuitions way lower than that just because we do small groups and we do it online. So we don't have, as traders, we don't need brick and mortar places. We do everything online. We've been doing it 12 years. It's funny how the world's waking up to Zoom. We've been using Zoom and GoToMeeting forever. and we don't believe in having big corporate offices. We're just a different breed. If you're a trader, it's not about incurring costs. It's about saving money. It's about making trades that increase your probabilities. So I'm going to give you some nuggets that will help you if you stayed on this long. A lot of times when we bring up anything about education, people will start signing off. We can see that in analytics. Here's some things that I think will help you. If you're a trader, it is a game of probabilities, and you have to see it as a game of probabilities. What you want to do is stack your probabilities in your favor. If you're going to stack the probabilities in your favor, the question is, how are you going to do it, and what elements will go in there to stack that in your favor? Let's reverse this. If your account size at Ameritrade, E-Trade, Scottrade's not around anymore, Thinkorswim, Interactive Brokers, a favorite of mine, whatever, wherever your brokerage is, for that number to get bigger, one of 2 things have to happen. Okay? Either you have to grow that through the investments that you're in, or you got to put more money into it to see that number increase. Okay, let's say we're not going to put any more money in, so we're only going to focus on trading and investing. The only way that account number will get bigger is if your positions, increase or naturally, and you sit through the ebb and flows, you sit through the drawdowns, you sit through the big drop that we just got here, the Corona drop. it's a significant 25-30% drop. That haircut is significant because it takes a long time to make that back, right? Or you make it by trading, where you get in and out. You don't incur the losses dropping down, or you make money when it drops and you make money when it rallies higher. That's smart, savvy investing. That's another way to increase it. So let's say you're not going to be a buy and hold. You don't like the idea of sitting through these drawdowns like we got in the let's say technology bubbles in 2000 when it dropped, or the financial bubble when it popped in 2008, because it takes a long time to make that money back up, to even get to break even. And then you got inflation year over year to make up for that. It takes a long time to make your money back. Okay, so everyone who did a buy and hold had made their money back, but now all of a sudden they incurred this significant drop as of recently. And the question is, how long will it drop? It could be many years. We're up 11 years, expect a 5-year pullback. That's half, okay? You go up 10, you're down 5. You go up 4, you're down 2. Think of it in half. You always cut it in half. Okay? It's the Fibonacci retracement principle is what we're talking about here. I'm just simplifying it. With that said, we want to position ourselves to exploit opportunity when it comes to us. So how can we make money when the market's going higher? Well, you have to buy and buy long and be in the right stocks. So you have to be able to pick the right stocks. The only way to pick the right stocks is to understand the fundamentals, the numbers of the business, and to understand the technicals. A lot of people say, I don't need the fundies, I'll just do the technicals. That's fine too. Charts don't lie. Do the charts, let the charts show you the way. What I have learned is that when you incorporate fundamental analysis with technical analysis, that is a powerful combination, because you pick your companies fundamentally and we trade them technically. That's what we teach. Matter of fact, we teach you how to quickly find the most explosive, best companies out there. That's what we're after. So because that's what we do and that's what we're after, that's what we teach. We do it like that. Now, the question is, well, how do you find the most explosive companies? Because if you can find those that are fundamentally set up, they're fundamentally strong, that means you have institutions and hedge funds purchasing those same assets, those same securities, those same equities, those same stocks, okay? That's the name of the game, because it's the institutions, 80% of the market. That's like the camel going through the room, and we're a flea jumping on its back. In other words, what we need to be doing is honing in on the same stocks that the institutions are looking at. Because institutions have one responsibility, and that is to always be purchasing, buying, because they're selling people like you to put money with them. And the only way they make money is if they make a purchase, because they get a cut from it. So they're constantly buying, purchasing, buying. That's what they're doing. So if they're buying, they're looking for big, solid, great companies to purchase, okay? What we want to be doing is identifying those companies. So when we're in them and they're making purchases, we just naturally get these gap ups and these runs in our direction. It's like a gift. All of a sudden you're holding something like, whoa, it popped up 4% for me today. How did that happen? Well, it's because an institution was moving in. They have to buy in increments. They can't just come in and buy all at once, because they'll cut their own throats. They'll jack the price up as they're buying. They can't do that. And they don't want to trigger smaller institutions and smaller hedge funds to follow what they're doing, because if they start buying, the price goes higher and they're buying it at worse prices. I'm getting too deep. Okay, way too deep. But the idea is to be in the same companies that the institutions are purchasing. Now, likewise, if you're going to be shorting, let's not short those companies. Let's only short the companies that when they do have to liquidate to make more funds to make other purchases, they're going to be looking at their dogs, the worst companies. Well, you want to look, and they're looking at the fundamentals. They're not looking at charts as a whole. So they're looking at the fundies, the numbers of the business. So we have to understand which one the weak ones are. Let's short those. So when those hedge funds or those institutions start to unload them with the big money, we'll just magically get these runs to the downside. You know, all of a sudden we're holding something short and you get this 2.5% drop today. Why? Just because another institution unloaded some of that business and it drops. It works in your favor. Again, it's all probability stacked in our favor to help us make money in the markets. And there's a multitude of things that we add to add the probabilities in our corner, right, to trade. So for you, you need to know how to pick the best companies. The best companies, period. That's what you need to do. Listen, a lot of you guys don't know this, so I'll share it with you. We have a Stock Picks V newsletter. Okay, it's a Stock Picks V newsletter. It's a monthly subscription, but every week, each weekend, you get this, and I'll be doing it this weekend because Mark's teaching the mentorship. But you get 2 lists. You get a bull list and a bear list. We pick those lists fundamentally. These are fundamentally strong. These are fundamentally weak. These you go long or buy. These you sell short and short. So you get 2 lists each week. We do this. And it's $300 for the year, or $30 a month or something, $28 a month, something like that. It's $30 a month, I think, or $300 a year. Or I give it to you free. You can have the whole year free of charge, all 52 weeks, free every week. You get this list. You can buy it, perfect, or I'll give it to you free. The only way to get it free is if you're not a mentor student yet, because what you want, this is for somebody that's interested in mentoring and wants to know more about it. If you do a phone call with us, I give you, regardless if you become a student of ours or not, okay, we give you a full year of the V newsletter on us, our treat, our gift. Go make some money. That's what we do. You do that. How do you find that? It's easy. Just go to Grok Trade. You can see above me, Grok Trade. Click on Trading Mentor, and there's multiple forms on that page. You can read all the stuff, but always scroll up to the top. The very top form is the form you want to fill out, because there's some criteria to meet. You know, there's some small print there. The small print is you need to have at least $10,000, okay, in the markets. That's like the small one. If you don't have that and you're not in America or Canada, hey, if you're in the United Kingdom, we'll take you, or Australia. Australia, you guys, when you take the course, you have to stay up all night to take our course because you're way over there. We get a lot of Aussies, guys. Shout out to the Aussies and the Kiwis also. Shout out to you guys. Anyway, that's it. There you have it. There's some good information for you. Be smart. Be savvy. There's a lot to look at in the market. Stack those odds in your corners and make money. And a big question for you, and I'll end with this question. If your account is down in this market, whose fault is it? Let that sink in. Take care, guys. We'll see you. Bye. Say bye.
Bye.